In a world obsessed with get-rich-quick schemes and flashy crypto promises, true financial independence grows from quiet, deliberate routines that compound over years. Imagine wealth as a garden. Small seeds planted with care today blossom into abundance tomorrow. In 2025, with inflation lingering at 2.7% and household debt soaring to $18.2 trillion, these understated habits are your shield against economic storms. This article unveils 5 powerful practices that steadily build prosperity, blending timeless wisdom with cutting-edge tools. From harnessing compound growth to tapping digital platforms, these strategies empower anyone to stack assets methodically. Packed with hard numbers and vivid examples, they show how consistent, small actions lead to monumental gains. Habit 1. Embrace consistent saving and investing. The bedrock of lasting wealth is regularly setting aside money and channeling it into growth-driven vehicles. This taps the magic of compounding, where earnings spawn more earnings over time. For example, stashing $200 monthly in a high-yield savings account at 4.46% annual percentage yield could grow to over $100,000 in 30 years, assuming no withdrawals. These accounts, often offered by online banks, crush traditional ones limping at 0.39%, making them a low-risk entry point for novices. Stepping into stocks amplifies this. The S&P 500 has averaged 10% annual returns from 1928 to 2024, adjusted for inflation. In 2025, with the index up 9.84% year-to-date, low-cost index funds are accessible through apps that automate contributions. Imagine a bar chart. A $10,000 investment at 7% return doubles every decade, hitting $76,122 in 30 years without extra deposits. Workers who save consistently report 21% higher financial confidence, and those automating investments see balances 23% larger over time. In 2025, amid rising costs, 55% of adults maintain emergency funds covering 3 months of expenses, a slight uptick from prior years. Cutting-edge tools like robo-advisors, powered by artificial intelligence, optimize portfolios with fees under 0.25%, tailoring to your risk tolerance. These platforms sync with budgeting apps, making savings seamless. Timeless is truth. Start small, but start now. Even $50 weekly compounds into a fortress against economic dips. Call to action. Open a high-yield account today and automate transfers to watch your savings grow effortlessly. Habit 2. Prioritize living below your means. Mastering spending restraint is a cornerstone of wealth accumulation. This means earning more than you spend, funneling the surplus into assets rather than fleeting indulgences. In 2025, with 52% of Americans living paycheck to paycheck, this discipline distinguishes those building equity from those stuck in debt cycles. Over 80% see debt-free living as a core goal, yet average household debt hits $105,056, highlighting the challenge. Envision a pie chart splitting income: 50% to necessities, 30% to wants, 20% to savings, a formula that turbocharges wealth. For a $75,000 earner, this directs $18,750 annually to investments, potentially growing to $1.2 million over 40 years at 7% return. Compare this to overspending. 33% report financial strain, often from lifestyle inflation, where raises fuel unnecessary splurges. Young adults lead the charge, with 72% cutting expenses or boosting savings amid higher costs. Modern fintech apps, using machine learning, track spending in real time, suggesting cuts that reduce overspend by 15% on average. These tools link to bank accounts, spotting traps like subscription creep, which siphons $300 monthly from many budgets. Classic wisdom: prioritize needs over desires. Automating savings ensures you pay yourself first, dodging temptations. This curbs debt, where credit card delinquencies hit 7.04%, and fosters calm. Call to action: track your spending for a week, pinpoint one area to trim, and redirect those funds to a dedicated savings account. Habit 3. Commit to continuous learning and skill development. Sharpening your knowledge base unlocks higher earning potential, opening doors to promotions and opportunities. In 2025, with 52% of workers needing new skills within a year, lifelong learning fuels career resilience. Those investing in upskilling report 10x returns through raises and advancements, as employers prize adaptability in a tech-driven economy. Picture a line graph. Individuals dedicating 5 hours weekly to learning see 14% higher earnings over a decade. Data shows 87% of professionals view training as vital for growth. In fields like artificial intelligence, continuous learners earn 20% more than peers. Trending platforms like LinkedIn Learning offer data-driven courses, with 2025 reports emphasizing talent retention through development. Virtual reality simulations enhance training, boosting retention by 75%, while micro-credentials certify skills swiftly. Enduring principle: knowledge compounds like wealth. Reading industry reports or joining webinars builds expertise quietly. Employees embracing this report stronger loyalty and productivity. If this sparks inspiration for your financial journey, subscribe to our channel for weekly skill-building tips. It's free and packed with game changers. Call to action: enroll in one online course this month and apply a new skill to your work. Habit 4. Develop multiple income streams. Diversifying revenue sources builds a safety net, accelerating wealth growth. In 2025, gig economy participation jumps 20%, with side ventures adding $1,000 to $5,000 monthly for many. Passive options, like rental properties or digital products, generate income with minimal upkeep, offering both security and freedom. Imagine a dashboard chart. Those with 3 income streams boast 30% higher net worth than single-income peers. Real estate yields 8% annually, while print-on-demand shops scale to $50,000 yearly for some. Amid economic uncertainty, 67% pursue additional streams to hedge risks. Emerging trends like solar farm leasing offer steady royalties, while AI-assisted content creation for affiliate marketing yields up to 10% returns. Platforms streamline these, lowering barriers. Classic insight: relying on one income is like betting on a single stock, risky. Starting with low investment ventures, like vehicle storage, sparks momentum. This shields against job loss and multiplies wealth. Call to action: brainstorm one side hustle today and launch a minimal version within a week. Habit 5. Foster networking and valuable relationships. Building meaningful connections unlocks collaborations, mentorships, and insights that propel financial growth. In 2025, networks drive 85% of job opportunities, with strong ties linked to 20% income boosts. Wealthy individuals credit 70% of their success to relationships. A network map might show central nodes with diverse links accessing deals, like investment clubs yielding 15% returns. Virtual conferences and AI matchmaking apps connect professionals, boosting deal flow by 25% in 2025. Timeless truth: your net worth reflects your network. Attending industry events or joining online communities elevates your path quietly. Call to action: reach out to one contact this week and propose a value-driven collaboration. In closing, these habits: consistent saving, frugal living, relentless learning, income diversification, and strategic networking, forge a roadmap to prosperity. With global wealth up 4.6% in 2024, adopting them positions you for success. Start one today and watch your financial garden thrive. All the best to you and yours as you set out to conquer the world.